I think we're trying to solve a question.
We stopped. Okay.
Yes, sir.
We are.
I think we saw some questions on that, sir.
Okay, have you started bank?
Yes.
You start by
Explain
introducing bank.
But donations have laws, right? So let's look at the laws around donation. Or let's say
Okay, no problem. So let's start from banks today. I've introduced bank. I've not solved any question on bank.
No, not yet, sir.
Okay, no problem. So I'm waiting for the admin to make me an host so that I can share the material. Though I've sent the material to the group chat this evening, updated material. Do we all see the material? Do we all have it? Can we see it?
Seen it, sir.
Okay. So I'm waiting for the admin to make me an host so that I can share. So while waiting for the admin, I may just be doing the introductions. Like I said in bank, last week I said there are some income of a bank that are subjected to taxable income of a bank. Why there are some income that are exempted from bank. Example of those incomes subjected to tax, they are management fee, insurance commission, account maintenance fee, trade fee, transaction fee, admin fee, advisory fee. Likewise too, interest is subjected to tax. However, there are some interests earned by bank that they will be exempted from tax. There are some interests received by bank that they will be what? Exempted from tax. So that will lead me to income exempted from tax. Income exempted from tax. Income exempted from tax. What are those income earned by bank that will be exempted from tax? So if you look at my notes, 3.22, income exempted from tax earned by bank. So if you look at my notes, it's stated there. I will explain them one by one. So I'm trying. Okay. So let's go ahead. Number one income earned by bank that are subjected to, that are exempted from tax are interest on loan granted by bank to a manufacturing company that engage in exports. Interest on loan granted by bank to a company for manufacturing goods for export. That is number one, interest. This number one, before the interest can be exempted from tax, it has one or two conditions. Number one condition, before, if a bank give a company that engage in manufacturing goods for export, if a bank give them loan, for the interest to be exempted from bank, number one condition is the company must have a certificate of exports issued to them by Nigeria Export Promotion Council. That company that received the loan, that borrowed money, they must collect a certificate of exports from Nigeria Export good manufactured by that company, the good manufactured by the company, not less than 50% of it. must be exported outside the country. What that one means is that more than 50% of the good manufactured by the company must be exported out of the country. They should not sell it locally because they are set up to be manufacturing good for export. So the law does not say they should not sell good locally, but more than 50% of what you produce as a company located in export processing zone, more than 50% of the goods you produce must be exported outside the country. So number 3 condition is that the rate of exemption that they are going to give, the rate of exemption, is not all the interest that will be exempted from tax. Is certain percentage of the interest. This is the number 3. There is a table. First is if the loan, the payment period of the loan is above 7 years, a manufacturing good for export borrowed money from bank and they are going to pay back like 8 years. The loan, 70% of the interest will be exempted from tax, provided that there is a moratorium period that is not less than 2 years on the loan. Grace period means moratorium period. Moratorium period means period that, and when you collect a loan, period that bank will give you off period that you will not pay both principal and interest. They can say, some bank can say, when they give you a loan, they give you 6 month moratorium period. What that one means is that within 6 months, you will not pay back. It's after 6 months you start paying back. So if a bank give a manufacturing good for export a loan, that loan, if it is above 7 years, the moratorium period must not less than 2 years. If the moratorium period is not less than 2 years, that loan has passed the condition. 70% of the interest on the loan will be exempted from tax. Second one is if the loan is between 5 to 7 years. That loan is between 5 to 7 years. The moratorium period on that loan must not less than 18 months. 18 months simply means 1.5 years. The moratorium period must not less than 18 months. So 18 months simply means 1.5 years. So in such case, 40% of the interest on the loan will be exempted from tax. 40% of the interest on the loan will be exempted from tax. Third one is if the loan is between 2 to 4 years, the moratorium period must not less than 12 months, which is 1 year. In such case, 10% of the interest on the loan, assuming the loan interest on the loan is 60,000, 10% of 60,000 is 6,000, will be exempted from tax. Only 6,000 out of 60,000 will be exempted from tax. While the last one is any loan below 2 years given by bank to manufacturing good to a company engaged in manufacturing good for export. If the loan is below 2 years, there will not be exemption on the loan. All the interest on the loan will be subjected to tax. The loan will not be exempted from tax. So that is that. So number 1 interest that will be exempted from tax is interest on loan granted by bank to a company for a manufacturing good for exports. That is number 1 condition, and he has his own condition, which I just listed now. Number 2, B, interest on loan granted by bank for primary agricultural production. When a bank give a company that engage in primary agricultural business a loan, Such loan will be exempted from tax. What is meaning of primary agricultural business? Primary agricultural business means an agricultural company that engage in rearing of animals, such as poultry, cow, plantation of crop. You are planting crop. You are a primary agricultural business. So if a bank give you a loan, that loan will be exempted from tax, provided it pass two conditions. What are the two conditions? The loan, the moratorium period on the loan must not less than 12 months. It means the moratorium period must be at least 12 months. Second condition is the rate of interest on the loan must not more than the base lending rate fixed by CBN at the time the loan was granted. The rate of interest on the loan must not more than the base lending rate fixed by CBN at the time the loan was granted. What that one means is that if a bank gives a company that engage in agricultural business, primary agricultural business a loan, such loan will be exempted from tax. All the interest, that interest on that loan will be exempted from tax. The full amount will be exempted from tax, provided the moratorium period is not less than 12 months. What that one means is the moratorium period must be 12 months and above. Secondly, the rate of interest charged on the loan is no more than the base lending rate. CBN every month, they normally fix monetary policy rates. They normally fix monetary policy rates or base lending rates, where bank will use as a basis for charging interest on loan. So what the law is saying now is, if a bank give a loan to a primary agricultural business, that loan will not be taxable, will be exempted from tax. The interest on that loan, if the moratorium period is no more than 12 months, and the interest, the rate of interest is no more than the base lending rate. C, which is number 3, interest on loan granted by bank to a company engaged in fabrication of local plant and machinery. Interest on loan granted by bank to a company engaged in fabrication of local plant and machinery shall be exempted from tax too, if the moratorium period is not less than 18 months and the interest rate is not more than the base lending rate. If the moratorium period is not more than 18 months and the interest rate is not more than the base lending rate, such kind of loan, the interest on it will be exempted from tax. D part, interest on loan granted by bank. Interest on loan granted by bank to a company engaged in cottage industry under Family Economic Advance Program. Interest on loan granted by bank to a company engaged in cottage industry under Family Economic Advancement Program shall be exempted from tax if the moratorium period is not less than 12 months and the base lending rate is no more than, the interest rate charged by bank is no more than the base lending rates. So that is that. Another one, which is the fifth, interest received by bank on federal government or state government security. Interest received by bank on federal government or state government security. Example of federal government or state government security are development stock, treasury bill, bond, treasury certificates, all security issued by bank, issued by government. If a bank subscribe from it and they earn interest on it, such interest will be exempted from tax. Even aside from bank, the normal manufacturing company, if they earn interest on federal government or state government security, such kind of interest shall be exempted from tax. Another one is interest earned on foreign placement or dividend derived by bank from outside Nigeria, but they are brought back to Nigeria through approved channel. If a bank have a foreign investment or they have a foreign placement, such kind of interest shall be exempted from tax, provided that the proceed was brought back to Nigeria through approved channel. Provided that the proceed was brought back to Nigeria through approved channels. So such kind of interest shall be exempted from tax. Another one is dividends received by bank will be treated as frank investment income. Dividends received by bank will be treated as frank investment income. Like other manufacturing company, service company, if they earn dividends too, if they receive dividends, such dividends is called frank investment income and they are exempted from tax. So what is meaning of frank investment income? Who can explain frank investment income for us? So somebody should tell us meaning of frank investment income.
So let me make an attempt.
Sir?
Let me attempt
Okay.
answering.
Okay, I'm hearing.
Frank investment is more like an investment income, right? Whereby the person paying you for the income has already deducted tax before the payment.
You are right.
So, yes, sir.
Frank investment income means income that have suffered tax at source. It has suffered tax at source. What does that mean? If you look at dividend, dividend is paid from, dividend is paid from profit after tax. Abi? Do we understand?
Yes, sir.
Dividend will be paid for from profit after tax. When a company earns a profit, that profit before tax, they will now remove tax. After that profit after tax, part of it will be declared as dividend, while part will be retained as profit, retained profit. Do you understand? What we are saying is, assuming a shareholder receives a dividend of 200,000 naira, we are looking at it that this shareholder is supposed to receive more than 200,000. because the tax has been deducted from that profit before tax, it has reduced the amount that will be declared as dividend. So dividend have suffered tax in the hand of the company. So it can never suffer tax again in the hand of the shareholder. So that is that. Now, for bank, their banks too has disallowable expenses. The normal disallowable expenses we have in the company apply to bank, like depreciation, loss on sale of fixed assets, donation to unapproved bodies, legal expenses for tax appeal, renewal of short-time lease, long-time lease, preliminary expenses. All these, they are disallowable expenses that apply to normal companies, either manufacturing company or service company. This also applies to banks too. It also applies to what? Banks too. Aside that, banks has their own special disallowable expenses. Aside from the general disallowable expenses I just mentioned now, bank has their own special disallowable expenses. Number one, special disallowable expenses of a bank is increase in provision for performing loan. In the expenses of a bank, when you see that bank make provision for performing loan, such provision will be disallowable, will be treated as a disallowable expenses. It's going to be added back to the net profit. Another one, increase in provision for on other assets or account receivable. If a bank make provision for other assets, when you see it in the expenses of a bank, you need to disallow it. When you see it in the expenses of a bank, you need to disallow it. So increase in provision for other assets shall be disallowed. Another one, increase in provision for advances under finance lease. Increase in provision for advances under finance lease too shall be disallowed. Increase in provision for diminishing in value of investment too shall be disallowed. Increase in provision for off-balance sheet engagement too shall be disallowed. Increase in provision for gratuities too shall be disallowed. Unrealized exchange loss shall be disallowed. But if it is realized exchange loss, it's allowed. It's an allowable expenses. Unrealized exchange loss means bank make provision that as a result of fluctuation in foreign exchange, they are going to make a loss from dollars, from their dollars conversion. They have not actually made that loss. Do you understand? They just make provision. That provision is an unrealized exchange loss. It shall be disallowed. But if it is realized, they have made the loss. It's allowed. So that is it on bank. Let's look at illustrations on bank. Let's look at illustrations on bank. Let's look at illustration of bank. Question 3. The interest on loan relating to a primary agricultural business, primary agricultural production, included in the income of ABC Bank Limited for the year ended 31st December 2021 amounted to 5 million naira. The breakdown of the interest income based on loan term are as follows. Repayment period, moratorium period, interest rates, agreed loan interest amount is given to us. Require the base lending rate in respect of the facility is 21%. Require compute the interest exempted from tax. Require compute the interest exempted from tax. So this is the solution. ABC Bank Limited, computation of interest exempted from tax for 2022 year of assessment, because it will be based on preceding year basis. Do we understand? Am I making sense? Do we understand? Do we understand?
Yes, sir.
So when you look at it, you now go back to the list of the salable non-taxable income of a bank. The condition I gave is, if you look at the condition for non-taxable income of a bank, number 2 condition is relating to agricultural business. Non-taxable income of a bank. Number 2 condition is relating to agricultural business. B. They said interest on loan granted by bank for primary agricultural business shall be exempted from tax if at least 12-month moratorium period is allowed, and the rate of interest is not more than what? The base lending rate. Go back to the question. If we go back to the question, now the first loan is 5 years. The moratorium period is 24 months. The interest rate charged by the bank is 15%, while the interest on loan is 2.5 million. If you look at, if you want to answer this question based on the conditions, the 2 conditions is moratorium period must not less than 12 months. The interest rate must not more than the base lending rate. So in this first scenario now, for this first loan, does the first loan pass the condition of exemption? I'm asking, does the first loan pass this condition of exemption? Does it pass the first condition of exemption? Look at the base lending rate, 21%. Who can answer this?
Yes, sir. It's passed for exemption.
Why?
Because the moratorium period is
Moratorium period
more than,
is more than,
yes, sir, it's more than 12 months.
yes,
And the interest rate is less than the base lending
lending rate. So
rate.
what that one means is that this 2.5 million will be what? It's going to be what?
With 7% and
It's going to be exempted from tax. Do you understand? So we are asked to calculate the interest exempted from tax. You can see that This 2.5 million is part of the amount I use under interest exempted from tax. Second one, the loan repayment period is 3 years. The moratorium period is 6 months. The interest rate is 20%. Does this one pass? Does it pass the condition?
No.
Why no? It
Because
did
the
not pass.
moratorium period
The moratorium
is
period is
12
less
months.
than, though the interest rate
Less than,
is
okay.
less than the base lending rate, but we need 2/2. We don't need 1/2. It must pass the two what? Conditions. If he pass one condition, he fail one condition, it's not going to be exempted. In this case now, the moratorium period is less than 12 months because it's 6 months. He failed. The interest rate is less than the base lending rate. He passed that one. But because he faced this, we are not going to exempt it from tax. Do we understand? Do we understand?
Yes, sir.
Okay. The third one, somebody should explain the third one. Somebody should explain the third one. Oh, yeah. Let the class be interactive. Let the class be interactive. Somebody else should explain the third one. Is it going to be exempted or not exempted?
It's going to be exempted, sir.
It's going to be exempted because the interest rates, the moratorium period is more than what?
It's more than 12 months.
Why the interest rate is less than 21%, which is the base lending rate, Abi? Do we understand? The fourth one, the interest rate is less, the moratorium period is less than what? 12 months. It failed. The interest rate is more than base lending rate. This one is 2/0/2. Abi? 0/2. He failed the two conditions, so it's not going to be exempted from tax. So therefore, out of 5 million naira interest earned by bank from this agreed business, how much is he going to be exempted from tax from it?
3,200,000.
3,200,000. Thank you very much. Let's look at another illustration. Prosperity Bank PLC. I've been in banking business for several years. The interest on agreed loan included in the account of the bank for the year ended 31st December 2022 amounted to 18.2 million. The breakdown of the interest income is given: 7 years, 36 months, 5 years, blah, 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 blah. The base lending rate, the base lending rate at the time the loan was granted was 15% required. Number one. Number A, state the condition under which interest shall be exempted from tax. A, interest on loan granted for agric trade or business. Who can state the two conditions for interest on loan granted for agric business? Number one condition, the 12 months. Why number two condition, the interest rate must not more than the base lending rate. Abi? B, what is the condition for interest on loan granted for manufacturing goods for export? Number one condition is certificate of export must be obtained from Nigeria Export Promotion Council. Second condition is at least 50% or more than 50% of the good manufactured must be exported out of Nigeria. And three condition is the rate of exemption, which is a table. B part of the question said, compute the interest exempted from tax in the case of Prosperity Bank PLC. So if you look at my condition, my solution, well explained. Interest on loan granted by bank. Question 1. Interest on loan granted by bank for primary agricultural business shall be exempted from tax if at least 12-month moratorium period is allowed. The rate of interest is not more than the base lending rate at the time the loan was granted or refinance. Second part of the question, which is the B, which is this one Roman figure 2. That one is for manufacturing good for export. You can see the beneficiary must export not less than 50% of the good manufactured sold out of the country. Certificate of export must be obtained from Nigeria Export Promotion Council. Why the three condition is the rate of the exemption above 7 years, not the grace period, 2 years, not less than 2 years, 70% of it, and so on like that, which I've mentioned earlier. So the working part of it, a loan of 36 months, rate of interest is 14%. 36 months is more than 12 months, it passed. Rate of interest, I will ask myself in this question, what is the base lending rate? If you go back to the question, the base lending rate is how many percent? Oh yeah, now
15%, sir.
15%. We can all see that, Abi. 15% is the base lending rate. So for number one loan that was granted, it passed the condition. So the 7.2 million will be exempted from tax. Because the base lending rate is less than, the interest rate is less than the base lending rate. The moratorium period that was given is more than 12 months, Abi. This one too, 5 years. The moratorium period is 18 months. It's good, it's more than 12 months. But interest rate is 18%. That is where the issue comes. The interest rate is more than 15%. 15% is the base lending rate. So in such case, that 5.6 million will not be exempted from tax. Abi? Four years, 24 months is more than 12 months. It's okay. Interest rate is less than base lending rate, which is 15%. This one is 12%. 12% is less than 15%. It passed. So in that case, 2.4 million will be exempted from tax. The last one is what? 2 years. The interest rate is 3 months. This one is less than 12 months. It did not pass because the interest rate is not more than 12 months. So it's less than 12 months. It did not pass the condition. It failed. Though it passed the condition of interest rate, the interest rate is 10%. It's less than the base lending rate of 15%. but he has to get 2/2. By virtue of that, this 3 million is not going to be exempted from tax. So out of 18.2 million, 9.6 million will be exempted from tax. So in some exam questions, they may be asked, they can ask you, out of this, which interest will be subjected to tax? How do we get the interest that will be subjected to tax? It's for us to minus 9.6 million from this 18.2 million.
Yes, sir.
Okay, thank you very much.
Sir, please, this particular illustration we are solving now, is it an agricultural company or a manufacturing company?
I read the question very well. Read the question. Oh yeah, let's read the question by one. Read it. Read it.
Okay. I've seen it, sir. It's for agriculture. Thank
Do we?
you.
If it is manufacturing, we are going to follow a table. The rule on that table. Do you understand? So what in my solution, I did not do the one of manufacturing, but I'm still going to update this material by hiding the one of manufacturing. I will add the one of manufacturing. I will add it to it. I'm sorry for that. I will add the one of manufacturing to it. Illustration 5. Adesua Bank PLC. Adesua Bank PLC is a commercial bank that engages in money deposits banking service. The bank has investment in major stock of Nigeria Stock Exchange. An extract from the financial statement for the year ended 31st December 2023 is as shown below. Interest income, interest expenses, profit before tax, balancing charge, litigation expenses, agreed capital allowance. Included in the interest income are the following income: AMCOM bond loan, FGM bond loan, state government bond loan, and so on like that. Charges before arriving at profit before tax is depreciation, amortization, impairment charges. Required: compute the tax liability and the levy for the relevant year of assessment. So this bank is Adesua Bank PLC. Is the bank of my precious wife. So the solution: Adesua Bank PLC. Tax computation for 2024 year of assessment. Profit before tax. We go and look at the profit before tax. Where is profit before tax in this question? This is profit before tax. You take it. When you are computing adjusted profit, you start with net profit. Net profit means profit before tax. It's not profit after tax. So in some exam, the examiner may want to convince the students. They will prove profit before tax. They will prove profit after tax. They will not ask the student to compute adjusted profit. Some students, they will go and make mistake to go and use profit after tax. No, when you are computing adjusted profit, that net profit is the profit before tax. So in my solutions, profit before tax, add back disallowable what? Expenses. I will add back disallowable expenses. Example of disallowable expenses. Depreciation is a disallowable expenses. Amortization of assets is disallowable expenses. Or loan amortization is disallowable expenses. Impairment charges, when you test impairment of a fixed asset, you now realize a loss or gain. In tax, nothing confined not with your IAS. All this your testing of impairment. We don't need that in tax. So we don't recognize impairment in tax. When you make provision for impairment in your expenses, tax authority is going to do what? What will tax authority do to it?
They will add it back to the profit.
They will add it back. They will disallow it. So we tax authority, we don't recognize all this your IAS, all this your fake guy, this IAS testing for impairment. You want to test whether there is reduction in value of assets. We don't recognize that. Who do you pay the impairment when you charge the impairment as an expense? That is what tax authority is going to ask you. Since you can't prove who you are going to pay, it's added back. So impairment is a disallowable expenses too. So I'm going to add it back. So in my solution, you can see that I added back impairment. Aside from that, litigation expenses too is disallowable expenses. Litigation expenses too is disallowable expenses. Litigation expenses means they take the bank to court. Maybe somebody take them to court. They now pay litigation expenses. The question in tax, anything that have to do with courts by paying lawyer is disallowable expenses, except you pay a legal fee for the purpose of collecting your debt from your debtor. Legal fees paid for collection of debt is allowed. But aside from that, any legal fees paid, any litigation fee by taking court fee paid, is going to be disallowed. So litigation expenses is disallowed. So when you want to compute tax liability for a company or bank, you are going to follow the rule of adjusted profit. What is the rule of adjusted profit? Who can tell me the rule of adjusted profit? Oh yeah, who can tell me the rule of adjusted profit? I want a response.
So the rule is your net profit, add back disallowable expenses, and then less allowable income.
Less non-taxable income.
Non-taxable income, okay.
Net, less what? Non-what?
Non-taxable income.
Non-taxable income. My colleague, Mr. Chris, will still take you more on adjusted profit. Me too, I'm going to solve question more on adjusted profit. We need to understand adjusted profit very well. The rule, like you said, net profits are disallowable expenses, less non-taxable income. But the rule is more than that. But that answer is not for today because of time. So I've added disallowable expenses. This is the total of disallowable expenses. This is the total of disallowable expenses. I will add it to the profit. This is the profit. You can see my cursor. This is the profit. I will add the two of them together. Once I add the two of them together, I will now less non-what? Taxable income. If you look at included in the interest income are the following: income received, AMCON bond, state government bond, Euro bond, corporate bonds, LBN bonds. All these bonds they are not subjected to tax. They are non-taxable income. Why they are non-taxable income? Why? Why are we saying bank will not pay tax on this? Who can answer? Why will bank not pay tax? Eh?
I think the profits made from selling of government bonds
Interest
are not
received
taxable.
on federal government or state government security.
Yes, sir.
Let me take you back. It's better we go and check. Number 5, interest is free by bank on federal government or state government development stock or bonds are what? Exempted from tax. They are federal government or state government security, anything bond. They are issued by governments. Anything bond, they are issued by governments. So in such case, all those bonds shall be exempted from tax. All those bonds shall be exempted from tax. So unless they are now regarded as non-taxable income. So I will write them. Their summation is 6 billion. I will less it. So in such case, looking at my computation, profit plus disallowable expenses less non-taxable income. At the end of the day, I will get adjusted
I have
profit.
a question, please.
Okay.
So for the interest on FMBN and AMCON Limited, is it part of government bond or frank investment income? What do we call it?
Part of government bonds.
Okay.
FBN means Federal Mortgage Bank of Nigeria. Who owns Federal Mortgage Bank?
It's government, sir.
AMCON. Who owns AMCON? Who owns AMCON?
Federal government.
It's federal government. Do we understand? So they are all government security. So in this question, I have a balancing charge. I will add balancing charge. I will get accessible profit. I will now less capital allowance. I will get what is called taxable profit. Taxable profit is otherwise known as what? What is another name for taxable profit?
Total profit.
Correct. Total profit. In some textbook, they will call it total profit. Once you understand that, you don't have an issue. So from my taxable profit or total profit, I will compute my tax liability. If I want to compute my tax liability, my CIT, company income tax, I use 30%. Why did I use 30% instead of 20%? Who can answer that?
Because it's a large company.
It's a large company. Their turnover is more than 100 million. You understand? Their profit is in billion gone. Talk less of their turnover. Do you understand? EDT, I used 3%. Why did I use 3% for EDT? Who can answer that? Why did I use 3% instead of 2.5%?
Because the year of assessment is 2023.
The year end of the question is 2023, but the year of assessment is what? 2024. Do you understand? I'll compute it. Aside from that, the company is going to pay NIGDA. NIGDA is going to pay what? NIGDA. NIGDA is 1% of profit before tax. 1% of profit before tax. What we mean by that is 1% of this. 1% of this is NIGDA. But in a question, when you don't have profit before tax or you don't have net profit, and you are asked to compute NIGDA, you can make use of adjusted profit to compute your NIGDA. You can use your adjusted profit. What I'm saying is, you can use this adjusted profit, your adjusted profit, sorry. You can make use of this to compute your NIGDA. But we have net profit here, which is profit before tax. We have to make use of that to compute our NIGDA. So that is how we arrive at this question. Any question? Any query? Any issues?
So I have a question.
Okay.
Yeah, still on my last the question I asked last, right?
Okay.
Those income exempted. I saw a corporate bond. Sir, please, is corporate bond part of government securities?
The question is that in Nigeria, only government normally issue bonds.
Okay.
Do you understand? So
Yes, sir.
corporate bond is still part of government bond.
All right, thank you, sir.
Okay, you are welcome. So in the absence of no question, we have done airline shipping company, we have done insurance bank. Let's now move to in my write-up, in my own write-up, I said taxation of specialized business. I group them into how many? 5. Airline, shipping, telecommunication company, which we have done. We have done bank. The next one that follow is taxation of insurance business, which we're supposed to start this night. But I will not do that one. Now, I will go to taxation of real estate business. Taxation of what? Real estate business. By next week, good evening, I will do bank by next week. Because of the time, we cannot finish. I will do insurance by next week. We cannot finish insurance now if it starts. But the one of that real estate, we can finish now. It's not much. We can finish the one of the real estate now. Let's try to address the real estate. By next week, we do the one of bank. Insurance, sorry. Taxation of insurance. So we do the one of taxation of insurance. So let's go to real estate. So this is taxation of real estate investment company. The objective of this information circular is to provide clarification on the tax treatment of real estate investment company approved or regulated by Security and Exchange Commissions under the relevant provision of real estate investment scheme. The information circular provides clarifications on application of section 9, 19, 23, 24, and 80 of company income tax. Real estate, as we all know, they are approved by Security and Exchange Commission. They are into building of houses, renting of house to tenants. So they normally earn income. Their major income is rental income. And apart from that, real estate, they also have investments. They can invest in another company that they will collect dividends. Dividend is another their major income. What is the rule? A company, trusts, or other corporate orders, such as corporate structure, approved or regulated by Security and Exchange Commission, which is primarily engaged or invest in income generating real estate assets or real estate related assets, is expected to distribute not less than 75% of its income within 12 months of receipt of the income. In this case now, what we need to understand in this situation now is for a real estate, let's look at the income of a real estate. The major income of a real estate, rental income, dividend income from another real estate company, gain on disposal of assets, others, fee, or other income not relating to real estate. Now, out of these four income I mentioned, the law, company income tax, is saying that if a real estate company receives rental income and dividend income, such kind of income will be exempted from tax, provided that that real estate company distributes at least 75% of such kind of income. They distribute it to their shareholder within 12 months from the day that they receive the income. distribute it within 12 months from the day that they receive the income, is going to be subjected to tax. So that is what they are saying. We need to know income of real estate, rental income, dividend income. We also have gain from disposal of assets, others, fees and commissions. But the one that the exemption of 75% that is exempted from tax is 1 and 2, rental and dividend income. Rental and dividend income, they are the one that will be exempted from tax, provided that once they receive that rental income or dividend income, within 12 months from the day that they receive it, they distribute at least 75% of the amount to the shareholder of the real estate investment company. Such kind of amount will be exempted from tax. So, like he said, dividend and rental income of a real estate and under real estate investment scheme, the following provision apply to dividend and rental income. Section 19, distribution of dividend and rental income made by real estate investment company to its shareholder under real estate investment scheme are exempted from the application of Section 19 of SISTA. As such, where such real estate investment company distribute the rental income and dividend income to the shareholder, such rental income and dividend income shall not constitute dividend for the purpose of Section 19 of SISTA. What this one is saying is, once they have distributed that dividend income and rental income to the shareholder, such amounts will not be taxable. That rental income and dividend income shall not be taxable. The law provided that the two major conditions is minimum of 75% of that dividend income and rental income must be distributed. And that distribution must be made within what? 12 months from the day that the real estate investment company earned such dividends and rental income. So those are what all the explanation that we are making here. Those are the explanation that they want to let us know. They are just giving an example. Now, let's go to illustration. Let's go to illustration. Illustration 1. Mark Incorporated Limited is a real estate investment company. Mark Incorporated Limited is a real estate investment company that operates under real estate investment scheme. The company received a rental income of 500,000 naira during its financial year ended 31st of August 2022. During the board meeting, it was agreed that 60% of the rental income shall be distributed to the shareholder within 12 months, as effected, as directed. Required
Value.
Required. Compute
Value.
the accessible rental income for the relevant year of assessment and comment appropriately. B, comment on tax implication and effects, assuming the management of Mark Incorporated Limited decided to distribute 85% and retain balance. A, they want to distribute 60%. They receive a rental income of 500 million. They want to distribute how many percent? 60%. And the law said what they must distribute to the shareholder shall not be less than 75%. In this case now, since 60% is less than 75%, 60% of 500,000, 500 million is 300 million. Why 75% of 500 million is 375 million? In this case, since 60% is less than that, there will be no exemption. What we mean by that is all the rental income shall be accessible to tax. All the 500,000 will be accessible. Our accessible income in question A will still remain 500,000 because what they distribute is less than 75%. Please try to mute your. Please.
So, but if they distribute 75%, there will be exemption. That's the total rental income will be exempted from tax. Or
yes, the total income, rental income.
Okay.
Now let's look at the B scenario. The B scenario said comments on the tax implication and effect, assuming the management decided to distribute how many percent? 85%, which is more than 75%. Abi? Now let's go to the B part. The A part, I will comment that the total amount will be subjected to tax because the amount that they distribute is not up to 75%. This is so there is the comment that we make on the A part. The B part now, look at the B part. They said 85%. 85% is more than 75%, Abi? Which means the total amount of that 500 million shall be what?
Exempted.
Exempted. There will not be accessible rental income. Good evening. All the rental income will be exempted from tax because the amount that they distribute is more than 75%. So this is the B part of the question. And you let them know that the distribution, the only condition that this 85%, when they distribute 85%, that will not be exempted from tax is when the distribution was not made within 12 months after that they received that income. You know, there are two conditions. Two conditions, Abi? The two conditions. The distribution must be made within 12 months. A, minimum of 75%. B, such distribution must be made within what? 12 months. But we are told in this question that the distribution was made within 12 months. So in such case, the B part, all the 500 million will be exempted from tax. So there will not be accessible rental income. I will rental income received less exemption. My exemption will be the full amount of that 500 million. Accessible rental income. My accessible rental income will be nil. So that is that. Let's look at illustration 2. MacBook. MacBook Year Investment Limited. Somebody should help us read. MacBook Year Investment Limited, a company approved by Security and Exchange Commission to carry out and operate a real estate investment scheme in Sokoto, Nigeria Limited. Make up his account to 31st July. Below is the extract from the annual return for the year ended for 2023 year of assessment. Rental income, dividend income, gains from disposal of assets, management fee received, profit from other related business, allowable expenses. Additional information. Distribution was made to shareholder on 30th September 2022, as stated below. Rental income, out of the rental income, they made 650 million to the shareholder. Out of the dividend income, they make 75 million to the shareholder. Profit from related business comprises of turnover from sales of properties, sales agents, brokerage fee, security, advertisements, others property expenses. Capital allowance for the year is 250 million. Required. Compute the company income tax and tertiary education tax for 2023 year of assessment. And comment on the tax implication of company transaction relating to real estate investment scheme. Now, I want to compute. I will now ask myself, look at the first income that this company has. Which income that they have? Rental income. How much is the rental income? 750 million. Abi? Out of this 750 million, how much was distributed? 650 million. 650 over 750. What percentage is that? 87%. And the law requires that they must distribute at least 75%. Since they distribute 87%, in such case, the rental income pay tax on it. B. And now, if you look at the question, again, they said the distribution was made 30th September 2022. 30th what? September 2022. And they received the income when? Assuming they received the income, we assume that they received the income maybe 1st of January 2022. The distribution was made 30th September. It's still within the 12 months. Do we understand? It's still within 12 months. So it passed the two conditions.
So how do we know it's within the 12 months? So how do we know the date is the correct? How do we know the correct date is up? How do we know it's up 12 months?
Okay. The question is, look at the end of this contract, 30th of July. It's the end. So the assumption is we assume that they receive it at the beginning of the year, which is 1st of January.
Okay.
And 1st of the accounting year end of this company is 30th of July. We assume they receive it in 1st of August.
Is it September?
1st of August.
What was it?
No, when something starts in August, it's going to end in July. You understand? An accounting year that starts in August is going to be 12 months by July. Do we understand?
Yes, okay.
So the distribution was made in September. It's still within 12 months.
Yes.
Now let's go to dividend. 75 million is the dividend. Abi, out of this 75 million, how much was distributed to shareholder? How much was distributed? Sorry, the dividend is 150 million. Abi, dividend income is 150 million. Can we see that?
Yes, yes.
How much was distributed to the shareholder? 75. So look at my computation. 75 over 150. That one is what?
50%.
50%. And the law requires that we distribute how
75%.
much?
75%.
75%. Since it's less than 75%, all the amount of dividend income will be what?
Will not be exempted.
Yeah, it's going to be subjected to what?
Tax.
Subjected to tax. We are going to pay tax on it. So that is the reason why I put the 150 here. You can see, not exempted. I put the 150 here. Do we understand? Now, let's go back to other income that we have. The next income that follows gain from disposal of assets. Gain from disposal of what? Assets. Gain from disposal of assets. I'm going to put it. It's an income. Management fee received. The management fees that was received, they said management fee received. And we know that management fee, it normally attract what? withholding tax. Do you understand? It attracts withholding tax. Since this is the amount that they received, the company that paid them this management fee will have deducted the withholding tax. When we are doing our computation, anytime that they deduct withholding tax from an income, what do? We have to gross it back to 100. Abi? In our elementary tax. Eh? Eh?
Yes, sir.
Okay. So we have to gross it back to 100. So the management fee receipt will be grossed back to 100. So if you look at my computation, the management fee receipt is grossed back to 100. Is grossed back to 100. Gain from disposal of assets too is put. Turnover from sales of assets, sales of property. This is the turnover from sales of property. I will put it. Because they said profit of other related entity. How they get this 227,446? They give us the breakdown of how they get it. The breakdown, this is the breakdown of how they get it. They minus some expenses from turnover from sales of assets. Since I'm doing it at the beginning, I will just add the turnover and all these expenses, I will go and put in the expenses side. So in my computation, I add all the income coming from various sources: rental income, dividend income, turnover from sales of property, management fee, gain on disposal of assets. I add them. They are all added. I get my total income. I will now ask myself, which expenses I have in this question. I have expenses. This is the expenses. Sales commission, brokerage fee, security fee, they are all expenses. I will minus them. They are all allowable. Assuming there is one that is disallowed among them, I will not use them. Do we understand? Assuming there is one that is disallowed, I will not use them. All these expenses I use, they are all allowable expenses. I will add my expenses. I will minus it from the total income. I get my adjusted profit or accessible profit. I will less my capital allowance. But my capital allowance is 250,000 and the profit available is 343,000. We have to follow the rule of restriction. Rule of what? We have to restrict the capital allowance to 2/3. 2/3 of the income. It means the capital allowance I'm going to remove, it will be 2/3 of 343,84598. The 2/3 of it is going to give you this. I cannot use all the capital allowance because the capital allowance is much. Assuming the 2/3 of this is more than the actual capital allowance, I'm going to use the actual capital allowance, which is the 250. Assuming 2/3 of 343 is giving me like 260, I'm going to use the actual capital allowance of 250. But since the 2/3 is less than the 250, I'm going to use it. The balance between the 2/3 and the actual capital allowance, I'm going to carry it forward. Capital allowance carry forward. After, I will minus this from the capital allowance, that 2/3. I will minus it from this. I will get my taxable profit or adjusted profit. For my taxable profit or adjusted profit, I will compute my company income tax. 30%. of taxable profits. Withholding tax has been deducted on some income, which is that management fee. I will minus the withholding tax that has been deducted from that management fee. I will minus it from the company income tax. I will get the net balance of the company income tax. I will now compute education tax of 3%. Of education tax is computed on adjusted profit or assessable profit. Education tax will be based on this, but company income tax is based on this. So that is how I get this. This is taxation of real estate. Taxation of real estate is a new area. I'm thinking that ICANN will set it very soon. ICANN will set it very soon. So we need to understand it very well. We need to understand it very well. So, ladies and gentlemen, this is all what we have in taxation of real estate. For this question we solve. If you have any question, any issue, let me know. And if you have any issue after the class, in the group chat, my WhatsApp is there. You can send message to me. So I'm a tax consultant. I work as a tax consultant. I'm normally busy. I am normally busy, but I have to create little time for me to answer your question. So, any query, any issues?
Yes, I have a question, please.
Okay, what is your question?
So the restriction of capital allowance. In our last class, the lecturer said it's 66 to third. Is it the same as just freezing to third? Will it give you the same figure?
It's the same thing.
Okay, sir. So another question.
Are you with your calculator?
Yes, I am.
2/3 of 100, what is it going to give you? 2/3 of 100%.
Okay, 66.66.
Assuming you are using percentage, you are using 66.6%. But if you don't use percentage, 2/3, finish.
All right, thank you, sir. Sir, also I want to ask this management fee, right? That they already have paid withholding tax on it. What about we ignore it? Is it possible?
When we ignore it, our answer will not get the right answer. We will miss so many marks. We will miss Marco. We will miss Marco. Our taxable profit will not be the same. Our adjusted profit will not be the same.
Okay. So you know why I asked, right? I don't know. When we started today, you mentioned something on frank investment income.
Yes.
So you said when an income is a frank investment income that we ignore it, like you deduct it because it has already been taxed at source.
Yes, sir. Yes, sir.
So being that this management fee now has been taxed at source, I'm just confused
That
why we
one,
have to bring
closing
it
tax is not tax at source.
Okay.
If I render service to you, if you did not withholding tax, who is still going to use that withholding tax?
I will remit it to the tax authority.
Yes. So in the long run, who is still going to benefit?
It's the company now.
The person that received the income.
That's it. So
Now, take for instance, I'm an auditor, tax consultant. I render audit fee, audit service to your company. For my audit fee, you did not withholding tax. when you want to go and remit the withholding tax, you are going to remit it in my name.
Yeah.
When I'm computing my own tax, I'm going to use it to reduce my tax.
To serve as a tax credit.
It's an anti-tax evasion policy. Do we understand? Do we understand?
Yes, sir.
So any other question? So in the absence of no question, we can call it a day. I've been working since morning. I have a lot of work. So yesterday, I have like the theory lecture, physical lecture yesterday. So my voice is cracking now. So please let me just call it a day. So thank you very much. Yeah.
Thank
Thank
you,
you,
sir.
sir.